So this is me, everything I'm going over right now is me getting a feel for the market to see what's going on with the overall market. I'm looking at the best stocks, the most heavily weighted stocks inside of these index funds. And the index funds and the stocks are matching up. So, all right, so I took a swing trade on Micron Technology, MU, and I'm showing you this so that way that you can see that supply and demand works. But I used the entire account. The entire account was at $84. So as you can see now, I'm up 43%. If you do $36, if you see whatever $36 is 43% of, then you will see that is roughly like $84. So the account had $84 in it, and now it's at $120. Now I risked the whole entire account because it's only $84, and I took a screenshot of my fill from yesterday. So you see, this is the screenshot. Yesterday, 6:53 p.m. You see I got filled at 1 p.m. for 83 cents. That's the premium, so that's $83. And I bought puts. Now the reason why I bought puts is because of this setup. So here we have a daily supply zone that got formed back in March, right? Monday, the 24th of March. We have a base drop. We already know that there are a significant amount of selling orders that haven't been filled yet. So we return back to the price. Yes, stocks are rallying, but when in my other videos, I talk about gauging the market, understanding how to get the overall sentiment of the market by looking at the indices and index funds or whatever like that. So if I see that the overall market and the major stocks are pulling back, I can start to see and look for different setups that cause pullbacks, which are supply zones. So that's what I did here. And at the very same time, we also got a bear flag. A bear flag is a bearish candlestick confirmation or pattern that allows for traders to take advantage of the probabilities being in our favor when going to the downside. So here you see these two trend lines. Yesterday, it didn't look like this. Yesterday, we was up here, and this is where I got in at on this candle up here. Once we got that little engulfing candle, I was pretty much in with my stop loss being the top of the zone. So my stop loss is the top of the zone, and everything else is just pretty much free profit. So I bought contracts that expire in about 7 days. Now it's 7 days. But as you can see, pre-market is at 91. So my strike price is at 90. So I'll soon be in the money. The $84 has now turned into 120. By the time the market opens at 9:30, it should be way more than that. And I'll make another video. But yeah, this is just the power of supply and demand. It don't matter how much money you got, you can always make money with it as well too. So yeah, so just to go back to talking about the move, mind you, this is how you know I bought before it broke the trend line, or it actually, those unfilled selling orders got filled, or selling started to exceed buying, or in other words, supply exceeded demand. Because you see, the majority of the move happened pre-market, right? So the whole entire move that kind of justified my reasoning for entering the trade happened after the fact, after I got into the trade yesterday at 1 p.m. So because I'm already up 44% on a very, very small account, I'm not going to be greedy. And when the market open, I'll probably be up like 60, 70, 80%, whatever it is. And I'm going to just go ahead and close the contract. The reason why I'm going to close the contract is because, yes, I'll be up such a huge amount on a small account. But also, I have one contract, so I can't scale out of the position. So in order for me to pay myself as the market makes money available to me, I would have to sell a contract, sell another contract, or in other words, scale out. But I can't scale out because I only have one contract. So that is why when the market opens and I'm up 80, 70, 90, whatever percentage I'm up, I'm gonna close the contract, because for an account that started out with less than $100, making more than 50 is crazy. So it's like, I'm gonna just take advantage of it and pay myself as the market makes the money available to me, but with the one contract that I have. So yes, it can continue to go down or whatever, but I'm not really worried about making sure I catch the whole move. I caught the main move, and the main move was the drop out of the supply zone and the break of the support that made up the bear flag. So that's why I figure I continue to make this video real quick too. But I'm gonna come back and make another video when I'm in profit and I close the contract. So as you can see here, I'm up 159%, and I'm about to get ready to close the contract. Boom. So I bought it at $83. I showed you my fill. This is what I sold that contract for, $2.06, which is really $206. So $83 turned into $206 in some hours. I use put contracts. I'm being as transparent as possible. And yeah, this account was at $83. 83 plus 123, you got 205. So yeah, I use this exact setup right here. I saw a bear flag in confluence with a supply zone. Supply and demand is all you need. And these are my results. This was an account that I started yesterday with $84. Alright, so I'm home. I was on the road the whole time I've been managing that trade. I got into it yesterday in the house after I had analyzed it on my phone, by the way. So this is something that, bro, once you got this kind of skill set, you could just look at a chart anywhere in the world from anything. So you don't always need a whole entire setup, you know what I'm saying? You don't need 3 screens, 2 monitors, 1 iPad, phone. Bro, I rock out with my iPad and my phone. I done already been through that phase of, damn, maybe if I had more stuff or more equipment or more screens, dang, I need a long monitor. I used to want this long curved monitor, bro. You don't need none of that stuff, bro. You feel me? You gotta just work the skill and learn price action, understand the candlesticks, and get in the game. So that just come with time, but I'm just yapping right now. I want to get to the charts, right? So, because I'm not driving no more, and I want to just really go over the trade that I just been talking about, right? So, if I go on the daily time frame, we got this supply zone right here. This supply zone is a drop, basing candle period time, and then followed by another drop, which constitutes as a supply zone. Now, it's not even drawing a scale. I'm sorry. So my only job was to wait for this to return back. Now, granted, I wasn't following this stock. I'm gonna just keep it 100 with you. I was looking for my setup. You see what I'm saying? I could care less about the stock. Only thing I really care about the stock is, 1, we got volume, and then 2, the spreads on the contracts, meaning like the price difference of the bid and the ask when I'm finna buy the contracts, because I have to worry about slippage, getting filled, and all of that. So I don't care about the stock. I'm just looking for my setup. And remember, in my other video, I talk about getting the whole vibe or sentiment of the market. I've been realizing that we've been in this little pullback, right? This is like a little pullback. You see, we bounced down here out of this zone, came out, right? Now we got this little small pullback. Well, this same thing has been happening for your big stocks, right? The ones that I have shares of in my long-term portfolio. We dropped, rallied up, and boom, you see this pullback. Now, as I'm noticing this pattern, it started to even look like we finna bull flag here and then go for the next rally, and then everybody finna set a new all-time high. So my long-term portfolio probably finna look good within the next coming weeks. But yeah, that's what I've been realizing for all of your big stocks. Look, Apple, we even pulled all the way back down to this same demand zone that I had added another share right here. Look, when we pulled back into this demand zone right here, I added another share long term because I already understood that was the pullback that I was looking for to add to my long-term position to just build more equity in the company I believe in. You feel me? So this is me, everything I'm going over right now is me getting a feel for the market to see what's going on with the overall market. I'm looking at the best stocks, the most heavily weighted stocks inside of these index funds. And the index funds and the stocks are matching up. So boom. Now in my mind, I'm like, okay, these stocks not just pulling back for no reason. These stocks pulling back because they are, one, they could be in this exhaustion period, but the real and only true reason is because of supply and demand. So my responsibility is to just locate, identify the supply and demand on the charts. Now I'm focusing on supply because I'm already knowing, like, okay, supply is exceeding demand. That's the reason why the stocks are pulling back. They're going down. So I'm looking for supply zones. I found a supply zone, and I also got confluence. So what I mean by confluence is, not only did I find this clean clean supply zone, but I also noticed the candlestick pattern on a 4-hour chart. I'm like, okay, cool. We got what you call a bear flag. Now let's look up what a bear flag is. Bear flag pattern. This is a bear flag pattern where you have a trend that goes upward. Right? You see this trend, how the high and the low is a continuous inverse relationship between higher lows and higher highs, and then we dump off. Right? This same as that thing. Right? So you got higher lows, right? Then you also got higher highs. I noticed the same thing here. Higher highs, right? I'm sorry, higher highs, higher lows. So I'm like, okay, cool, bear flag, boom. In confluence with the supply zone. I never just trade flag patterns by themselves. I just love to see them line up inside of my imbalances, right? So that was just the trade that I took, man. And then I went over the reason why I did my risk management, because I'm just like, this not no real money, bro. Like $84, I'm just practicing the skill sets. And in this case, it wasn't necessarily me practicing my risk management skills. It's me practicing me executing my edge. That's the most important thing to me. Get into the habit of executing my edge flawlessly. You see what I'm saying? So that's what this is about. It's not about the money. I just use the dollar amounts to get you to pay attention. And so when you pay attention, now you can actually learn from somebody who actually doing it for real and who genuinely have a passion for this space versus trying to just be sold on to something or a product or a service or some kind of continuity program. You get what I'm saying? So this video gonna be a little long, but $84 to $206 in a couple of hours. That's a crazy return, you know what I'm saying? So just, comment on the video, let me know like if you understand why I made my decision making or not. And shit, I'm just trying to build a little space or an environment where I can connect with people who like to trade and invest, talk about stocks.